Welcome back to another episode of Property Now, where we just had probably one of the most fascinating conversations we've ever had. Really wanted to speak from a property developer perspective to unpack and understand how a property developer chooses their sites that they choose to develop, and what that might mean for a property buyer or an investor. So what are developers looking for in their sites that are going to make them profitable? I think there's a lot of insight there for an investor as well. So it was a fantastic conversation. I sat down with Steve Maroun, who is a development director for Lanevick. He had a lot to say. It was fantastic. Daniel McMahon, he gave us the agent's perspective. So he's a director at Colliers, and he's the guy that sells sites to developers. So he gave us that reverse perspective as well. Of course, we had Chris Ferris, CEO of Coposit, who in a previous life was a property developer dealing with acquisitions. So he had a lot to say as well. It was very fascinating. I learned a lot. I know you will too. I'm Michael Carbone. My friends call me Carbs. Let's get straight into that conversation. So Steve, how involved are you in the acquisition, or how did you start with your development?
Yeah, so
company?
We started originally as a family business. So father founded it father immigrated from overseas, came in the late 80s, started cement rendering, shirt on his back, typical immigrant story. Did quite well in rendering, then late 90s, banded with his brothers, and they started development. Rode the Olympic boom, killed it. 08 came, lost everything. Only thing that stayed was the family house. And then that coincided with myself finishing school, and then we sort of rebuilt from there. House came up for sale next door to the family house. That became purchased it. That became my degree on property development. And then 19 years later today, we've sort of built it back up to where it was back then. That's as quick and
I've got to unpack that a little bit. So Lanevick is the name of the company. What was it called before with your dad and brothers?
So my father and his brothers they weren't structured in a way where, brand today is second to none. And back then it was literally about, if you could just, do the job, that was what was important. I think Chris knows, it was a complete different landscape back then. So a bunch of different companies with names and SPVs and whatnot, but there wasn't a predominant sort of, leading. You got to remember, these guys barely spoke English.
Yeah.
So they were, literally dealing day to day with, advisors that were literally their sons.
Yeah.
And those were the advisors. So it was a complete different landscape. But yeah, Lanevick as a name sort of came in 2016, I believe.
What's
the name? Lanevick.
Yeah.
What's the idea behind the name?
What is it?
So Vic in Latin is champion, and lane is like an alleyway, road less taken. Okay. So we realised we had to sort of champion the roads less taken.
Nice.
It was a sort of shouldn't spend too much time on a name when it's just an idea. But long story short, that was the idea behind it. But yeah, we've sort of, I'm very big on just, on output and very big on like substance, like all the gloss and all the, for us, it's show me, like walk the walk, talk the talk, don't just talk, right?
Yep.
So it really, for us as an organization, we've only really sort of come out and sort of, I guess, started to, jump on more sort of, podcasts and jump on in the wider scheme in the last year or so.
Yeah, okay.
Just because I think the trajectory of where the business is going, at this day and age, I think it's just
and a brand is so important in this market.
Exactly.
So people resonate with brands, particularly buying
100%.
Off the plan properties. A brand is super important. I think obviously you've recognised that.
Yeah, most definitely, particularly the last like 4 or 5 years after COVID, with all the Opal Towers and Mascot Towers and all the defects and all that good stuff. You need to differentiate yourself in that. We're almost all thrown in the same developer bucket where it's like, shoddy, dodgy, and just, wants to make a quick buck. And so if you don't differentiate yourself from that and actually just put a face to your name and put yourself out there, then it's just incredibly difficult, particularly in this day and age and off the plan.
Which shows confidence for people wanting to transact. If they can see you
most definitely
in the public face, you're happy to be on a
Correct.
It gives them confidence that what they're purchasing, that the owner 100%. Of the business is there talking publicly. They're not hiding behind any
100%.
closed doors.
And that's what it's about. Look, at the end of the day, we're all humans. We all make mistakes. But if you're going to stand up and say, this is who we are, this is what we do, right? If anything goes wrong, we are here and we're not running away. That gives confidence that, these people are, they're putting themselves out there. They're putting themselves out there. So I think it's as you said, it's an imperative today.
I love that. I will come back to that first home that you bought.
It's
got, like, part of the topic is how you choose your sites, and I assume how you chose sites back then is probably different to how you choose sites now.
Most definitely.
Chris, very importantly today, in a previous life, you were part of acquisitions in your old property development company. Was a big part of what you did. So I think you're going to have a lot to say as well, and you probably have a similar background.
Really similar backgrounds. Dad came in the 70s, I believe, from overseas, war-torn country. Came here with, I think, five brothers and a sister. Similar sort of story. They were all working together. Not developing as such, but Dad was a plumber by trade. We were always on sites as young kids from the age of 10. I remember in school holidays, kids were like, "Oh, school holidays, what are you going to be doing now?" I said, "Working." Digging a trench with Dad.
For free.
Very important for free. And
child labour laws back then.
There wasn't.
But what we didn't get in money, we learnt in experience and hard work. And I think the things that we learnt there, I still think of today. The value of hard work. Being a plumber, it's sort of that middle trade where you get to see the electrician come in, you see the bricklayer, you see the carpenter. So you see all the different trades with the plumber. It's not like a form worker. It's a bit different, for example. But you get that exposure. And then we started developing in 2010. Finished in 2021. So about 10 to 11 years of apartment development side of things. So me and my brother Daniel, with a couple of investors and partners. But we developed apartments side of things, and we could really feel what the customers need. I think from a site acquisition perspective and what we would look for in sites, resonates very much with what our end user, so our customer, would want in a property. So what we saw in those sites, we would actually convey why we decided to purchase that property to develop a project, is typically the same reasons as to why someone would buy an individual apartment, for example, in that project. So
you almost had like the end avatar in mind. Like,
you have to
put yourself in the shoes of the guy or the girl that's going to purchase this and be like, okay, well, what would they want?
Correct. Even if it's for someone that wants to live there and purchase, but if someone was an investor, why would they buy that as an investment? Who would actually look at that property to rent? Why would they rent that property? Is it close to schools? Is it close to a station to get to work? Is it close to shops? So we used to call that the triple S method of school, shops and stations back when we were looking at sites. But that typically aligns with what customers, what purchasers or renters wanted within a project.
And that's what I want to unpack today and really dig into. So our normal listeners will say, you're speaking to a bunch of developers about why they buy their sites. What's that got to do with me? Well, what it has to do with the buyer is you may be able to find some insights into maybe what you should be looking for, how you find that next suburb. I think that's super important. On the other side of the spectrum, Daniel, Colliers, you're selling sites to guys like this. So I wanted to get your understanding as well and your input too. How did you start in selling sites? Like how that all started?
Oh God, my tenure has been 12 years at Colliers. Yep. 12 years this month actually, so it's been a journey, and I must be transparent. I've been 10 years of that 12 in project marketing, so I've done a lot of experience dealing with developers on the tail end of that development journey. So just the conversation around having hands-on experience with regards to being a trade before you become a property developer, I think that translates into a lot of developments because you understand the quality that needs to go into the development, especially from touch and feel perspective. The other part is project marketing. There's a lot of brand development through that as well. And I'm a big advocate for brand. And I'm glad you've gone down that process because I find in the last probably 10 years more than anything, and probably even since COVID, brands have been resonated so much more with buyers. But also storytelling with that brand as well.
No, it's definitely a process. Definitely a process.
I've found the most successful developers at the moment have a brand behind them, and also to touch on the other third point that you guys made was having the end consumer in mind as well when they're buying a site or even designing the apartments for the site as well. If you're ticking those boxes as a developer, you're probably going to be much more successful than those that aren't ticking those boxes.
So what are some of those things that the successful developers are doing? Like what are they doing for the end consumer in your opinion?
So they've got a consumer base where they understand exactly what they're looking for, and it could be very geographical. And every developer's got their own brand profile that they want to target to a certain audience as well. So some developers I work with, they're purely working the lower North Shore specifically, and they won't buy another site outside of that unless it really fit what their consumer is looking for. And one developer I've got in mind, his key metrics, it's got to be 200 meters within a shopping precinct. It's got to be a level walk, and it's got to be a level side as well, and suitable for downsizers. Specifically, that's what his criteria is. Yeah. So he's developed his whole brand around that, and he won't buy a development site unless it meets that criteria.
And I think, would you say it's critical, particularly in those areas like the North Shore, where it's almost, we talk about brand, but the local brand is pretty much what differentiates these developers from each other, because you're selling product there for, up to, I think, 21 a metre. Yep. Like, it's critical, like, in context, it's like a 3-bedroom for, for, say, $4 million. Yep. Like, it's critical that they're able to differentiate between, this developer that's local to other developers. So.
Yep. Yeah, it's brand recognition, and it's like, why would somebody buy Nike over, say,
Kmart cotton, the same cotton shirt that says from Kmart or has a tick from Nike?
There's a premium for us. There's a loyal base behind it as well, and there's developers who have got a similar approach to the way they do business, and like Stockland have the same approach, Daycorp. They've all got a brand associated with it. So when they do their marketing, people see that brand, and they automatically go, I'd rather buy that than the one next door that's got a no brand on it.
A lot of the bigger developers, they'll have repeat buyers that will only buy in their projects because they're aware of the quality. They understand that what they're looking for. So I think that's what I didn't expect this much brand talk from developers and salespeople, but as a head of marketing, I'm very for it. So that's fantastic.
No, but I think it's very important because I think it creates a conversation around putting more thought into why they do things over and above just buying something for face value. Yeah. And this comes down to developers, but also investors when they're buying something as well. And so, like, just having an understanding of who are you, if you're investing in an investment apartment, who's your end consumer for that?
Yeah.
And like, why would your end consumer actually rent that apartment over something in a neighbouring suburb?
Yeah.
And just understanding, like, we'll probably get into this later on, but just understanding, like, what's the depth of market for that end consumer as well.
Yeah. The demographics.
If it only represents 10% of that market, like if you're investing in an apartment, that's a 2-bedroom and it's very similar to everything else that's in the market. Yeah. You got to really consider, like, is it the best investment?
Yeah. No, I think pretty much hitting keeping the end in mind. In simple English, I think keeping the end in mind is absolutely critical, and at the same time being agile. Through COVID, we saw the study all of a sudden became the part of the apartment that would make the sale. And I think, look, in residential, we're fortunate where inherently what you are selling is a roof over your head. Inherently, that's the problem that you're solving. And having the ability, or making sure you have the ability to stay agile, where in COVID we saw developers amalgamate a lot of apartments in development sites because your 2 bedrooms, one bedrooms, they weren't sought after anymore. Stock. Exactly right, but they were able to amalgamate them, and then all of a sudden you had 4 or 5 bedroom, 150 or 200 square meter floor plates that before COVID developers were running away from because it was like return on investment. So I think having that ability to stay agile is what developers are sort of is critical for us. Is that today this is the market, this is where the market's going. The residential generally doesn't change too much, but COVID obviously put created a huge difference. And so having that ability to stay agile is top of the list for us as developers when we're looking at sites and we're like, okay, well, if we can't sort of, this is our strategy today, but are we able to, pivot in the event that, something does happen? So I think that's critical in a location.
Yeah, great. Take us back to that first time.
Yeah, I can see you've been tinkering. Yeah. So I finished school. I did well academically, but I just didn't know what I wanted to do. All I knew was I wanted to be in business. So always had a hunger, passion for business. So I was a guy selling, knocking doors to doors and just sort of always staying busy. And so I went into law because I topped it at school, and I was like, just seems like a normal route, and go finish that degree and then be a lawyer, open up practice and go down that route. I walked into my first class and I looked around and I was like, man, I do not want to wait 4 years to open up a business. So I was like, what can I do? And I was like, I picked up, property maintenance skills and handyman skills working for free in what seemed for free. And so I said, I'll open up a property maintenance company and I'll just get work and, people can help me with it. And so I started printing out a list of like 100 real estates in the local area. Went and door knocked. I think I got to like 60, 65, and I had to grow a beard just to look a bit older. And I think the first lady, I still remember, she gave me first property manager, she gave me a shot. It was like a fence paling job or something like that. And from that, it sort of grew, kitchen renos, bathroom renos. And at 21, still at uni and doing quite well. And the house next door to the family house comes up for sale. And so I was fortunate enough to be in a position to acquire it, and always wanted to get into property, but it was always how can I? And so that became my degree, as I said earlier, into development, commissioned the first surveyor and literally partnered up, and that became, the grounding block between, in the business that pretty much, started it. That was the first property.
And I assume back then, being next door to the family home was the only it was like just great criteria because you were there.
Yeah, correct. But look, when you start out, 100%, you don't know what you don't know. And so it just made sense, right? The thing is zoned, it's up for sale. We're just going to pay overs to get it. So we bought it, and there was no real rationale or thinking, or it felt right.
And I assume now suburb selection, there's a bit more of a criteria in place?
Correct. Look, as you obviously develop and as you mature as a business, you start, realizing that there is actually things you should look for and things you should avoid. And so you realize, look, inherently the money is made when you buy. So all your money is made that day that you buy. And so if you're relying on saving money in construction, or you're relying on the market going up, or you're relying on, the government putting in a hospital, you're not going to go far. It may work, one project, two projects, but inherently the money is made when you buy. And so now we're very, very specific. We our DD, our upfront acquisition is the majority of our time, and because the rest of it is just execution. Although the acquisition part is probably like 6 months to the project's life cycle of 4 years, that is the most critical time. The rest is literally just execution. And so today, we're much more prudent.
Ask a question. Sorry.
Go for it.
That first purchase that you bought next door, obviously there was not much DD that was done.
No, more than just you want to go partners there. He's like, let's do it.
Back of the envelope.
Back of the handkerchief.
I think the important part is you dove in.
Well, correct. Yeah. Look, you've got to throw yourself in the deep end, so to speak, and learn how to swim. Like, look, at the end of the day, opportunity, there's a saying in our culture, is like, opportunity only comes so often, and if you don't take it, you never know when it might come back. Yep. And so putting yourself out there for opportunity to come by is critical.
Yep.
You might have a similar story, Chris, about a granny flat. I remember you telling me one day.
Back in the... so my property experience sort of started, and it probably wasn't much of a development side, but it was when I purchased my first house in Blacktown.
Nice.
In 2010, I think.
Yeah, nice.
So very different prices to today, but it was like $295,000 in terms of purchase, first house. And then I looked at it from a perspective of what else can I do from a highest and best use. And it had this massive pool in the backyard. So the big old concrete pools that used to come up.
Pebble Creek ones. The old
but it was just a nightmare, right? So I originally had that property rented out, and no tenant actually wanted the pool itself. So it was a huge problem.
Yeah.
So I looked at what could I do within the backyard because I wanted to get rid of this pool. And then I saw the new CDC laws were coming out about granny flats. And I looked into that and said, what is this? And it's basically you can put up to a 60 square metre house in the back called a granny flat. You could rent it out, still on the same property, on the same title, but you could rent it out. And that was my first experience going into the development side of things. So had bought that property, rented it out, and then built a granny flat 2 years or so later.
Yeah.
And that really gave the first look into a development side of things and being able to double the income effectively on that same property. And that was my first foray into the development side before going in with Daniel, my brother, on larger development sort of scale side of things. And
so asking the questions and just, again, putting yourself out there.
What can you do on that property?
Correct.
It's really important.
I guess the other point is just starting small as well. Like you don't need to do a 50 apartment development straight up. Like
100%.
100%. It's just like an investor as well looking to rent an apartment. You don't need to buy, like some apartments got amazing views of the city first and just lease that out to get $2,000 a week. You start anywhere, you get whatever you can enter the market with.
And I think some of the learnings for me, that property that I first purchased, I was fairly young back in those days. And there wasn't this massive criteria that if I was buying property today that I would have at the moment. but it was just based off price. There was 3 that was for sale in a row, and a lady had passed away. She owned 3 of them.
Yeah.
And I just bought the middle one, basically.
It just felt right. It just felt right. Like there's no, you know, starting out with anything in any industry, in any career. You just throw yourself in there, and from there you sort of start your learnings. Yeah.
And I think from the development side, as that it evolved, right, with what we need for customers. I think when we started going to the apartment development side of things, we would go in and knock on the doors and option up properties and do all that.
Yeah.
That fun stuff. But when you're looking at that process and going through what is required for a site, it's the simple thing is, what would I want if I'm living there?
Yeah.
Would I want to be close to a station? Would I want to be close to shops? Would I want to be close to schools, so primary school and high school? What schools are in the area for my kids in future? If it's a particular location, for example, in Seven Hills, where we were developing a lot, a 1-bedroom apartment is not the stock that's required for that area, for example. There's a proportion, but it's primarily 2-bedroom and 3-bedroom. Our 3 bedrooms that we used to have would be about 10 to 15% of the overall development, but would sell first straight away based on that location. So what do the end users, what do they want to see in a site, would dictate how we would purchase. And we had hundreds of sites put to us over the period of our development, and we probably only purchased 8 to 10. So, we reject, call it 90% of sites, because they don't fulfill the requirements that we would need as a developer, first and foremost as a developer, and secondly as what would our customers want when purchasing a property in future.
You mentioned Seven Hills as an area that you guys developed in a fair bit. Why Seven Hills? Like, what was it that made it attractive back then?
So, look, that was interesting. That fell into our lap in terms of the location, where we saw that an area was getting rezoned around the station. And Daniel was also fortunate that he lived in that area, and he saw that it was getting rezoned. And they had large blocks that we could acquire. But then there was also, it had everything. It had a local shopping centre, quite a large shopping centre right next to it, about 400 metres away. It was on the station. There was really good schools around the location, so 2 or 3 different primary schools. There was childcare centres. There was a couple of great high schools, like a sports high school around that location. And they were the primary ingredients with what we could see from a perspective of building. There was an RSL club locally. There was great open space.
It ticked all the boxes. And I think it was just affordable. It was just really affordable. Correct. Like, I think in 2021, you were saying, from
2016 to 2021, that location was quite affordable stock. We're talking $600,000.
$600,000, yeah. Where the median was like 900 or 950 for apartments.
Good old days.
Were there many other apartment developments around
there?
That
was another really important aspect. We'd optioned quite a few properties in that area that people couldn't penetrate that space, so we had locked up the whole area effectively to be able to get the development side of things. So there wasn't competition of stock, so we were able to set the benchmark for what was in that area. And then we looked at other locations which were typically a higher end side and said, can we bring the finishes of that higher end product into the Seven Hills market that hadn't been seen in that market before? So giving them something that they hadn't seen or not expecting from a finish perspective, so how the kitchen is finished or how the bathrooms are finished.
Yeah. Did you find there was a big value add out of that as well?
It was.
Yep.
I don't know if we saw the particular value add, but what it meant was people were falling in love with the stock.
Yep.
So that's a big difference. So maybe we weren't getting a price uplift,
yep,
but we were able to achieve the sales,
yep,
and people were actually, we saw 19 and 20-year-olds buying property there again.
Yeah. Well, this is great because it comes back to, it always comes back to the brand and the consumer.
Of course it does.
I've done... This is a marketing podcast. No, because I've done projects for Sunland Group, who are no longer around, but they did a project, I managed the project for them in Mount Annan. So it was 143 townhouses, but they got a distinctive style to their developments, especially their townhouses, which they only did medium density in New South Wales. And if you ever see one of those developments, it's purely just white.
I've seen
and
that.
They really stand out.
Yeah.
But they, from an outsider's perspective, it looks like they overcapitalise in the finishes and the quality, but they didn't. They just created something that was quite unique to their product and to their brand, and people could tell it was a Sunland Group product. And it drew a lot of buyers in because they didn't see that product in the area at all.
Yeah.
And they thought it was quite special, it was quite unique, so they invested more into it. They wouldn't pay necessarily too much money to invest into it, but it'll deter them from actually...
in the sale. Yeah,
it'll deter them from buying just a normal brick veneer property just around the corner. So yeah, it always comes down to brand and understanding what your end consumers want, and then just designing something to actually fit that mold.
I love that too. I always drive around and I see all these new developments, especially where I live in a west sort of area.
Yeah, and
a lot of developments going up, a lot of old red brick houses that have been knocked down and turned into these beautiful duplexes, I must say, really great finishes. But I always look around and I go, is this still going to be nice in 10 years? Or what's going to make it different to the one next door that's obviously going to be built as well very soon, probably. So you're looking for that differentiation and what makes it unique, what's going to make it appealing for someone else in the future, I think.
100%. And that's where, with also on that point of location, the triple S method you're talking about, I think it's important also finding areas that are undergoing gentrification. Particularly today, I feel like right now with the state government's stance on housing, they don't want to go out, they want to go up. And so there is, earlier this year, it was once in generation planning changes with the LMR and the TOD and whatnot. And so,
can you just explain those two terms?
Yeah, sorry. LMR is the low to medium rise code.
Yep.
And TOD is the transit orientated development program. And so pretty much what the state government did was they looked at their housing targets that the federal government had given them, and they said, okay, New South Wales, I think it was like 400,000 was their target of homes that they need to deliver in the next 5 years. And from there, they broke down and they looked at all the different local government areas, and they were like, where can we fit this density? So then they investigated all those, the huge shopping centres, the huge train stations that could be capable of absorbing this amount of density. And then it put mandates on each of those local governments in terms of, you as a council have to deliver 12,000, you as a council have to deliver 20,000, you as a council have to deliver 400. And then what it did was it then looked at the track record of those councils in delivering their previous targets. And what it found quite quickly was that the local governments, particularly in the central to the eastern seaboard, the eastern suburbs, they didn't have a good track record of delivering housing. And so what they did was they created a legislation that pretty much goes on top of the local government's planning codes, and has made now a almost fast track different route that developers can go through to deliver the housing that the state government needs to deliver. And so that's, in a nutshell, what that term means.
It makes sense. So near me, and I think near you as well, Five Dock Metro, right? They're building the Five Dock Metro, and all of a sudden there's 15 and 20 level apartments that are being approved around that metro.
Correct. The Bays area was one of the big TOD areas. Go for it.
But it makes sense because to buy a house and land in that area is massively unaffordable. Like no first home, like people aren't getting into that.
The inner west,
anymore.
you're talking, $3 million for a house from, probably the cheapest part of the
inner
west.
And you got to knock it down.
And you got it exactly.
You know what I mean?
No backyard, 100%.
But by bringing in some apartment stock, all of a sudden, my kids might be able to stay in the area.
Gives them an opportunity to not live in Dubbo.
And that's it's a stepping stone. Look,
Most
I'm
definitely.
sure Dubbo Zoo is beautiful.
Yeah. Dubbo's fantastic, but I mean, you probably want to live a bit closer to
It's a different type of
But
beautiful.
it's that stepping stone. It's that
I want to be
stepping
next to
stone.
calves, mate.
Yeah, it's the best. But so there's no that gap between apartments, townhouses, houses.
Correct.
There's a massive gap, and that might slowly start to come.
Definitely. Well,
together as
it's demand and supply, right? And what the government previously had been doing was their policies were stimulating demand side. Yeah. So like first home buyer grants and tax exemptions and negative gearing and all that good stuff. But what that does is it only almost inflates the value of the existing supply. And so what the government realized is we need to raise the supply in order to bring the overall price down. And so like for example, like say in Seven Hills, where say a house is worth $1 million and you can only develop on it 4 stories, now all of a sudden you can do 6 8 stories. All of a sudden the developer that owns that or that buys it he doesn't need to charge $750,000 for a 2-bedroom. He can charge $680 now because his cost of acquisition has dramatically reduced. And if he doesn't do it and he's greedy, his competition will force him to do it. And so what you'll see is that now with a lot more supply coming onto the market, and I'm talking areas like Ku-ring-gai, right? So areas where it's extraordinary, Ku-ring-gai. Like when they were talking about the TOD, I went there and I went to, I think it was not Roseville, not Linfield, the Colliers station. I went to the station there and I looked across the road and I could just look around. This place looked like somewhere in like regional New South Wales, like single story, large homes across the road from a station that has a direct route to the city. Like, what are you, 7 Ks from, or 10 Ks from the city there?
Oh, that's it.
And I was just like shaking my head, and I was saying, how the hell, is this even possible? Because we're, in the West, say Seven Hills or wherever, like it's just apartments on apartments on apartments. And so it made sense. It was like, if there's this huge housing affordability problem, and the only way to solve it is to increase supply. Like these areas that are central to, your CBDs, like they should be literally 10, 20 stories. And so I think the rationale behind the state government, to their credit, I believe they've done a great job, honestly, like for what they've started out. And I think it's another reason why they smashed the election.
And I think to that point, in terms of the supply, I think supply in well-located areas as well.
Correct.
Is
that's
key.
what it's about. That's the fundamental around it, is that they're in walking distance to
Colliers is a
trains.
well-located area, right? Where there's
Correct.
hospitals around there that key workers need to get to work. If they're coming from Box Hill, which is 2 hours away, then there's going to be a massive
Or the
problem
schooling,
from
like
unemployment.
as a first-home buyer or as an upsizer, education, where your children are going to go. And Karingai, as a LGA, has like 3 of the top 10 schools in so that's important. It's very, very important to be around that.
We had an interesting discussion after one of our live podcasts, which was based in the Lower North Shore.
Yeah.
And again, so one of these areas. So Karingai, I think, is North Shore,
Yeah,
right?
not sure.
Upper North Shore. But so, and a lot of times the interesting convos happen after the podcast. So obviously we keep recording. But so one of the conversations was around how, because there's no density being built in that area, and it's it's pretty close to shops, infrastructure, everything, but there's nothing. It's all house and land, right?
That's right.
So there's slowly the families have to move out.
Correct.
The school teachers have to move out. The key workers need to move out. So we're speaking to a local guy there, and he was like advocating for higher density in the area because their school was about to lose 3 classes
There you go.
per year.
Yeah.
Because families are moving, teachers are moving.
That's right.
And what happens to that area
there's no school.
Exactly. Right, so that's a big issue.
And there's no growth, there's no innovation, there's no, and it'll stay, idle as a regional town, like literally.
But I want, if you took a and this is speculation, but if you took a really long-term approach to it, the schools come out of the area, key workers in shops and cafes, they close down. Does the value of those areas naturally go down because there's no amenities in those locations?
Right? I would, if I didn't have my cafes nearby, it would be less appealing for me to live where I live. Definitely, I know we joke about it,
and
but
if your kids can't go to school there, you're not going to live in that area.
Cafes wouldn't be there if there wasn't, foot traffic. Like it works both ways. Like it's important. It's very, very important.
Yeah, we because we're on the ground, we're actually selling a project in St Leonard's at the moment called the Newlands, and we've actually found there's a lot of migration from residents who live in the Upper North Shore and having to come closer to the city, to the likes of St. to the areas where there is apartments being developed, because there is no options for them in the Upper North Shore. Like their preference is they want to stay in the Upper North Shore. That's where their families grew up. It could be a 3rd generational home they're coming out of. Yeah. But they can't stay there because there's just no supply.
And that's critical to that buyer demographic there, is because they're still, they're quite conservative, and they're quite, they like to stay, in that area. And so again, back to that, buyer profile and who's your avatar. That's the importance of that. But yeah, long story short, we're in a once in generation planning changes right now. Like now is the time that the state government is going to get its young key workers and its policemen and its nurses back, because as it continues, we're not going to be we're not going to it's not going to as a city, I think we're not going to grow as
Totally. And Dan, thanks for mentioning the Newlands. We're not very advertising on this podcast, but available on Coposit, where you can buy property for 10K.
Terms and conditions apply.
Yeah, they do. Steve, so take us to some sites that you're on at the moment. How are you picking them? Yeah,
great. So now obviously the due diligence phase is a lot more interesting, I guess, so to speak. So we found that in COVID, with the increased construction moved up like 40%, interest rates 13, 14 times they increased, and pretty much the investor market evaporated in Sydney. The first home buyer also evaporated, and the only market that was literally there was your downsizers, and potentially your upsizers in more affluent areas. And what we found was that anything west of the inner west on a feasibility just wouldn't stack up. And so we found that we had to pivot, and we had to pivot quickly. And so we sort of branched off from that high density apartment space to lower density boutique developments. And so today we're in areas like Lanevick, Hunts Hill, Ku-ring-gai, and so these are areas that, as a market and as a target market, can absorb or can almost pay the developer the costs to deliver the actual project. And so what we've found now is as I said, that's one side that's working, and the other side is residential land subs, infill land subs. That continues to work because land as a product, also you're not selling an aspiration, you're just chopping up land from a large block to say 15, 20 smaller blocks. So today we primarily focus on those two arms, so residential infill and boutique low density luxury.
Just with your approach to finding a development side, what comes first and what's the priority? Is it more the financial side of thing, or is it more location?
Yeah, so look, for us, it starts with, we'll only start looking in an area because of location.
Yep.
And then from there, we'll have established networks.
Yep.
That will then obviously filter through sites that will then pick and choose based on, obviously, look, a site is always going to, like, why does a site go to auction and there's 10 bidders and the 11, like the 10th bidder can pay a bit more than the other 10, is because he sees something that he can extract out of that property that the other 10 couldn't see. And so it's almost important to have all your ducks lined up, in terms of your finance, your construction, your end sales strategy, because when you have that all locked up, you almost got your finger on the trigger and you're ready to strike when the right opportunity comes. And so that's how we sort of navigate it now.
And how much? So I've been out of the development game, so to speak, for 4 or 5 years now.
Yeah.
We used to, when buying sites, again, same thing as yourself. Location was primary, and then financial side. Back then, we were very confident we could lock in what our construction costs would be. We are very aware with what we do here at Coposit across the board with construction costs and how we estimate them. How are you looking at, when you're doing a feasibility today, you're not actually delivering that project for another, call it 3 years.
That's right.
3 to 4 years if it's planning risk
Correct.
as well. How do you actually today accurately determine what your construction cost could be?
Look, obviously that's one of the huge differences when agents say have feasibilities and they put a part called contingencies. And so contingencies and escalation is, almost, it's almost developer by developer. Look, for us, we're a lot more fortunate because we have construction in-house. We're almost able to absorb, unprecedented price increases more than, say, your traditional developer model. And so, look, for us, having a contingency in place whilst also having the construction in-house, whilst also adding value on the design stage as well, pretty much put you in a position where if you can have, a 50, 60, 70% comfort from acquisition to design to construction, you've got a lot of sort of margins that you can sort of eat into in the event that, the unprecedented happens. So. Correct. Look, I think with construction as well is you put your investor hat on and you look at inflation longer term, and I just think longer term inflation is on the way down. I think COVID, obviously, with the quantitative easing and whatnot, and I don't want to get too technical, but look, long story short is I think for us, we're on the way back down. We were at 0.1 as an RBA cash rate before COVID. Right, so our economy, like the 2%, I think was the interest rates for.
Just came off fixed rates.
Correct. So as an economy, productivity, our productivity as an economy is not good. And so when you're not producing efficiently as an economy, deflation starts to occur. And so I think what's going to happen is, over the long run, I think inflation is on the way back down. Inflation is linked to interest rates that are linked to, that's my 2 cents as a developer that is not an economist.
Do you see construction costs ever coming down, or do you see them leveling out? And
no.
They go up year to year. I think they still go up. Look, do you see them coming down at all?
Look, construction, if you break it down, is a portion of labour and supply. And so when you look at labour, it's probably 60-70% of the cost is your tradesmen, your plumbers, cement renderers, your everyday trades. Why are they asking for now $600-700 a day as a tradesman? Is because they've got rent, or they've got a mortgage, or they've got, you know, electricity
Groceries,
bills.
yeah.
So for them, do you see gas going down? Do you see electricity prices going
Those
down? Do you
costs are
see
only going up.
Correct. And supply side, look, where you know, again, same thing. Price of oil, the price of the imports to provide that supply to get it to your, you know, to get it to your site. That's not going down. So there's truck drivers. So long story short is, I don't see construction going down. I think the only thing that has to happen is the end sales have to go up. And for end sales to go up, that's driven by borrowing capacity, and borrowing capacity is linked to interest rates, and interest rate is linked to inflation, and it's all a
It's a
full
good time to
cycle.
buy.
Look, honestly, like I think I was on Mark Burrows' podcast, and there was a comment. It was like, "Look at this developer spruiking property." But honestly, I honestly believe, if you look at, like we said it on that podcast, was like replacement costs of an apartment. Like back then, apartments, when I say back then, only 2020, to build a 2-bedroom, 2-bathroom would cost you $250,000. Today, that's $400,000. So naturally, everything has to go up as a minimum $150,000. That's without the compliance increase, the class 2 building regulation that's happening, particularly in New South Wales. Long story short, if you just look at construction and you look at compliance and you look at, there's an import cost that needs to be passed on. And so naturally that will be, you know, funneled into all the established product, all the established units.
So you think naturally the prices have to increase?
The prices have to increase. Like at the Newlands, what are they selling for as a square meter relative to established product? They're probably 20% above the established product.
Oh, if not more.
If not more.
Like we've had a 20% growth in prices since we launched that project about 2.5 years ago.
Yeah, there you go. So I'm saying, like, an apartment that's finished, say, in 2021, right? I know there's not many of them, versus, say, off the plan that's going to be finished in 2026, 27. Like, there's at least a 40-50% difference in price. And so,
and I suppose if the worst case alternative is if those prices don't increase, and people still need to be able to afford to purchase, the projects just don't happen, and then that affects supply. So it's a vicious cycle.
That's what's been happening for 3-4 years.
Correct. I mean, I mentioned to you earlier that same project in Seven Hills, which we developed in 2021. If we were developing that same project today with the same metrics, it would not get out of the ground.
It'd be work experience.
Exactly right. It would not get out of the ground. It'd still be a site. So that's quite concerning.
And you drive around, say, you know, those areas now, and you'll see, mate, those old, you know, the old houses that are on those blocks of land, all of a sudden they've, you know, whacked on some cladding, and they're renting them out. They've been vacant for 2-3 years.
The larger problem I see, for example, if supply can't get out of the ground, like that location, I we've got a connection with that area. I always look how many are available for rent, how many are for sale. At the moment, there is one out of about 400 properties there available for rent, and there's about 2 that are for sale. So that shows that the area wants more supply because the demand is there. And rental, it's only going to mean that puts pressure on rentals to increase if there's only one available out of 400, for example.
That's right. That's
a huge problem within that location.
100%.
I think you just touched on a really good insight for a buyer, looking at what's available for rent, what's available for sale.
The best question, I mean, we always talk about, from a consumer side, what to ask when they're in a displacement. I always found fascinating, one question that someone asked us was, why did the developer choose to purchase this site? And so a purchaser was coming in, talking with the agent on the ground, and they actually asked us, why did the developer decide to buy this site? Because that's very important for them. And I found that as a fascinating question from a consumer. If you're ever going into a display suite talking about, of course, ask the questions about who the developer is, the brand and whatnot, but ask, why did they purchase that site? And if I feel that they can't give you a good enough answer, then that's probably a concern from your perspective, but ask that question. Why did they purchase that site?
What's the story, I guess, behind the reason?
There is always a story as to why a developer chose that location.
Yeah.
And I think it's really good to get those insights as a purchaser who's potentially putting their whole life savings in, going to buy one property in their whole life. Ask that question as a minimum.
Yeah.
We've had the best success on some projects where the developer's actually done presentations to the consumers and gone through those questions. Even the architect as well. The architects have got really good stories behind them and why they've designed a building in a certain way as well. Yeah. Because they've done the analysis on who the consumer is and what they're looking for and what the new trends will be going forward as well. And it all ties in with the developer and why they've acquired the site as well, because usually the architect has early engagement with the developer when they're buying the site. So yeah, it's a valid question. Like, why did the journey start at the developer's end?
Yeah,
and why are they designing how as you mentioned, during COVID, a study became extremely important. So there is changes. So what we built 20 years ago is not the same as what we're building today, and it's not the same that the market requires. So it's important to ask those questions as to why it's been designed this way, why you're building this location, what's the attractiveness for that developer, and that's the same reason for the consumer side of things.
Yeah, no, I think most definitely. But yeah, like as you said, you know, like the days of the brand and not having that brand, and we keep going back to the brand. So I'll let we gotta sort of change it up a bit. But yeah, look, long story short, look, it's critical. It's critical that you, as a buyer, when you're looking at what to buy and you know, which development, when you're comparing, is, as you said, you know, what's the story, you know, what's the reason, and with that in mind, you sort of you feel more, you know, at ease.
One final thing I'll touch on, because I realise we are going over time.
Yeah.
Gentrification, you mentioned it earlier. I was speaking to a developer up in Brisbane, and there's for anyone that's unfamiliar with Brisbane, Newstead, close to the city, really nice. So if you're in Sydney, it's probably like a Newtown, Marrickville sort of feel. They're actually developing in the suburb next to Newstead, and they're saying they're getting so much interest because it's cheaper than Newstead, but it's like the suburb next door.
Yeah.
So you can start to see that people, once they can't afford this area, they go to the next area. And we've seen it in Sydney as well, you know, along train lines, you know, people go to the next stop and just
affordability driven. Yeah, just creep.
Is that the sort of, how do you identify that as a developer, or if you're trying to sell to a developer, how do you guys identify what areas are gentrifying next?
Yeah. So I guess, you know, if you read any advert on residential apartment sites, you know, the first thing they'll talk about is the schools, shops, the train line. And that in itself is, you've got to imagine there was, you know, how much would it have costed the government to build that train line? Like billions, like hundreds of millions of dollars, right? And to upgrade it and to maintain it. The schools, you know, another couple $100 million. The hospitals, another couple $100 million. And so you've got to understand the government is a business, and they want a return as well on their investment. And so they, you know, they stand to benefit the biggest when, you know, you're there and you're proposing, you know, 100 apartments next to their hospital, you know, that they're going to get rates from. They're going to have stamp duty there. The property is the second biggest driver of the Australian economy, and so after professionals, so they're a partner in the property game. And so I think, you know, infrastructure is obviously critical, because you're just building on the, you know, on the traffic that's going to be generated from that.
Yeah, I agree with that. And what I've noticed over the last few years is there's been a big drive to lifestyle driven purchases, and I guess less of a drive to buy a house with a yard and so forth. And I think that's because, number one, affordability, but number two, there's a big transition to a mindset where people are happy to actually buy an apartment these days. So therefore, the reason people buy an apartment is because they want to compromise on having a house and land, but they want to be close to friends, family, shops, train, and all that sort of stuff. Now, the only way they can do that is actually buying an apartment in well-located areas. Now, the benefit of everything the state government's doing at the moment with all these planning changes is they're pretty much mapping it out for everyone where the new core areas are going to be.
Yeah.
So there's no guessing anymore. So if you see the train lines up Ku-ring-gai Way, there's 4 stations there with Todd, where there's going to be a lot of apartments going up around them.
They've almost done the mapping or the due diligence for you. We're very fortunate. Look, developers in Sydney and New South Wales are actually, like, compared to the world, we're very lucky. Like, we're very insulated as an economy. Like, if you go to the States or there's a lot of boom busts economies there, because you've got to almost sell a city rather than just sell. We're here, you know, you've got your government as your, you know, your partner, where they're, you know, they're investing millions and millions and millions of dollars, and all you're doing is just capitalizing on the traffic that's going to be generated from that. So we're very, very lucky. But yeah, infrastructure, you know, as you said, it's like, for developers, you almost can't look anywhere else, because that's the only place you can build.
I love it. Let's did you have something?
So you're probably going to ask the same question, but
yeah,
probably to both of you. So what would you see in a site that would turn you off completely and make you never want to purchase that site? So is there one key element that you'd look, so you get presented by a site from Daniel, for example, and you say, mate, love you as a bloke, this particular site, it's not for us. And
I'll take some notes when I send it to
no,
what's that one thing that just rules it out?
Yeah, no, great question. Look, obviously high level planning wise, so you look at a site, right, and then you've got a vision of what you can put on the site. What are the things that are going to prevent that vision coming about? So you've got general planning stuff, easements, how does it slope, how does it, you know, all the covenants and all that legal stuff. So when we look at a site, as I said, we look at what we'd like to build there, and then we'll work backwards and be like, what are the things that are going to prevent us from getting to that vision? And so, we that's why the due diligence process is so important. So we'd look at, things like, all your mapping, or your DA tracking, so we're pretty much breaking this down to, piece by piece, to understand, are we able to achieve what we know the market wants there, in that location. So there's been sites where they're residential zoned, but we know the highest and best use there is commercial. But like, there's a planning proposal that you need to go through that's going to be 2.5 years, that's going to, require capital, that's going to require. So things that are, our job inherently as developers is uncovering the highest and best use. That's our job as developers. And so when we obviously locate an area, we know in that area there is, a huge demand for large 3-bedroom apartments that have the study with no maintenance, so we know there's a huge demand there. Where are they coming from? We know they come from 0 to 3Ks, and what do they want? And so we know sort of what the market wants there. And so we're looking at, okay, what are the planning things that are going to prevent that, and financing and operational issues that are going to prevent that thing from happening, like sites that are sloped, sites that are, we'll know. Look, everything at the end of the day is, like it's value
it can be
for
manageable
money
as well.
Yeah, most definitely. And so, yeah, that's what we'll look for, or that's what we'll sort of rule stuff out. And then also portfolio management as well is like managing the portfolio. So sometimes we'll have, our pipeline is full of, say, built to sell stuff, and we need some stuff that we want to hold, right? And like portfolio management as well is another thing that we sort of think about. But yeah, look, the long and the short of it is we know what the highest and best use is, what's going to prevent us from getting that highest and best use, and what are the time and operational risks to getting there.
I think if a developer's prepared to hold some stock, that's a good sign for investors too.
Well, they're your biggest. Well, if they've built the thing, correct. And we hold because we think the areas that we're particularly in, like we're vested in this. Like our buyer is an owner occupier, right? So they, as you said, want to feel like these guys are going to build something that's going to last. And look, this day and age with construction and a lot of builders going bust and whatnot, it's so important. It's so important.
I think we'll end it there. This has been longer than I told you guys it would be. So thank you for your time, gentlemen. We probably could have went for another hour. It's just fascinating. So maybe we'll come back for round 2 at some point.
Easy done.
Thanks for coming on to Property Now, guys. We'll talk soon.
Thanks for having me.
Thank you for watching.
This is Jason He, the sexiest voice in property, here to tell you that the Property Now podcast offers opinions on Australian property news for informational and entertainment purposes only, and general in nature. It does not take into account your objectives, financial situation, or needs. It does not constitute professional advice. Always seek expert guidance before making any property-related decisions.